Hi, welcome to the Market Alert for Thursday, the 4th of February 2016. So yesterday we had a sell signal from the off. The market moved lower. Unfortunately, had to get out of the market owing to the high impact news item. Manufacturing figures came out and then the market dropped lower, but picking up 57 points in this, and that's enough for the day. I've said before, if you collect a decent profit at the start of the session, then you don't need to worry about the rest. And when we look through the quieter time, again, just to clarify something for you, if you've made profits in the first part of the session, you don't want to trade the quieter time, because generally the market will, as it did yesterday, go quiet. Even though there was a profit there was a loss of 46 points on this trade. Then in the evening session, the market decided to turn around. Now, it wouldn't be the first time that I've been told that I'm a bit of a conspiracy theorist and the markets aren't manipulated. In fact, many years ago, I had a professor of mathematics from Reading phone me and tell me that he didn't believe the markets were manipulated, and he could mathematically prove it. Anyway, he lost the argument, and that was years ago. So now let me just show you what happened here on yesterday evening. During yesterday evening, when the market decided to ramp up from 16,100. Now, bearing in mind first, let's just backtrack slightly. We see the market here bouncing after the crude oil figures. So let's just have a look at the crude oil figures first, shall we? And let's apply some common sense and logic to dismiss this as a conspiracy theory. Crude oil inventories came out at 7.8 million surplus. So if you've got a surplus of something, usually the market goes down. What does the market do? The market goes up. So that's the first thing. So that dismisses that straight away. Absolute nonsense, manipulated straight away. Crude oil rallies 8% yesterday when they had a surplus of just under 8 million barrels. So what happened in the evening? The market should have rolled over and continued lower. But no, they wheel out Dudley. No mention of him in the economic news yesterday. So what they do, they wheeled him out to have a chat with the mainstream pundits. And let's have a look at here. We've got the Dow soars off Dudley lows. It's a miracle. It's not a miracle. It's manipulation of a Ponzi scheme is what it's called. Dudley speaks. The China-Japanese mysteriously spikes high. Crude oil soars 8% and the Dow 400 points off its low. The question is, what now, as the Dow run stops on Monday's cash open? I'll come to that in just a moment when we look at the daily chart. So that's the first thing. And then futures jump after Bill Dudley hints at Fed policy error. We may have got it wrong. We're going to have to print more. We might even go negative on rates. Warns of significant consequences from strong dollar. And the dollar index yesterday fell out of bed as well on his words. So if you can't see how predictable this is, that it's not a conspiracy theory, but more of a conspiracy to try and keep the market higher. I mean, I've spoken about this for years and wrote about it extensively in 2011 before it all started falling apart. It is blatant. The central banks are in control of the stock market, not the underlying companies and their profitability and their earnings. The whole thing is a scam. And once you know how the game is played, then you can predict it, which is why it's so blatant of what is actually going on and why you can see this. You know, if they wheeled out a central banker, the market's likely to go up. And we've seen this earlier on in the week, let alone yesterday. Unfortunately, yesterday they didn't say that they were going to wheel him out. So now we get this spontaneous commentary to the mainstream business channels from a central banker, which or a report that's released into the market conveniently just before the close, and then you see the markets are rallying because, oh, this is good for stocks, this is good for all of their friends on Wall Street and in the banks to move the market higher. So that's the background to yesterday's, and you can see this yesterday. The market was moving down nicely where it should have gone, until Dudley was wheeled out, or his report was, and the market moved higher. And now we're heading back to the highs. And as it said on Zero Hedge, we have a bit of a squeeze going on because those that are short are going to actually add to the momentum to the upside. Because if you are a seller of the market with futures contracts, they have to be bought back, and the buying back of those contracts drives the market higher. So 16,510 is the next upside target. If this is taken out, we then head up towards this area here. of 16,591, and then here. And you can just keep picking off all of these highs if the market is going to move higher. So I'm going to leave those in just to save drawing them in each one, and we'll see where the market decides to go. So that's the backdrop for yesterday's activity in the Dow. So they're using whatever they can. When the fundamentals show that the market should move lower, they immediately come in and try and prop it up with some sort of commentary, or by pumping money into the market. This is just indicative of the China effect. And speaking of China, just before we go to the economic news items, there was a fix in the yuan yesterday, pumping money into the market, trying to bring the value up, because the Chinese People's Bank of China know that the markets are going to be closed from February the 7th to Monday the 15th. And whilst they're away, they are terrified of what the West are going to do to their currency. So that's what was basically going on yesterday. But back to today's economic news items. Let's see what we've got at... Oh, we got Carney out today. How wonderful. He's speaking at 12:45. Ignore everything he says, because ever since he came to office, he's never actually followed through with anything. So it really doesn't matter, except for the market will rally because they're wheeling him out to speak, and they only have to open their mouths, and that's enough to pump the markets up. What else have we got? Nothing really. 3 p.m. factory orders, medium impact, not too much of a problem. This is forecast to be -2.5, and again, there's proof if you ever wanted it. If the figure does come out at -2.5 for factory orders, then the market goes up. Then, of course, it's ignoring the basic fundamentals of the economy. But if Dudley or any Fisher or anybody else comes out, the market will go up, because it's more important than the true figures that come out as far as factory orders, manufacturing, and so on. In fact, yesterday the manufacturing figures were lower as well, but the market managed to turn around and rally 400 points because Dudley spoke, and that takes precedent over what's really happening in the economy, as it always has done. So central bankers are in charge by no stretch of the imagination. You'd have to be a complete moron, frankly, to believe that anything else happening in these markets at the moment. And it's not just me saying that. There are plenty of very good commentators of 30 and 40 years and fund managers saying exactly the same thing. So that's as far as that's concerned. The implied volatility, of course, yesterday 1888. It allowed them to drop this yesterday as the market rallied 400 points. You can see that in the chart there. So let's see what surprises we have in store today. If they're going to, again, wheel somebody out secretly, just as they need them to pump the market in their favour to keep the illusion alive that the Ponzi scheme is still intact. We'll have to wait and see for that later on. Other than that, that's it for today. I will see you in tomorrow's Market Alert. Friday tomorrow already. I don't know where the days go. But, as ever, thanks for watching, also for your support, and see you in the next one. Thanks for watching.